Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Elconin, along with Dennis Dick. And we have Christian Tharp on the line. He's a MarketFi maven and the author of the 5-Star Stock Watch. How you doing this morning, Christian?
Doing fantastic. How about you guys?
Good, good. Thanks for taking time out from your Black Friday shopping to join us here on the show. And let's get your thoughts on the overall market. We hit a new all-time high on Friday in the S&P futures. Pulled back a little bit overnight, but what's your long-term, short-term outlook for the market?
Wow, yeah, sure. Great questions. One thing that I'm watching specifically with the S&P right now is that there's a long-term channel that the S&P has been traveling in for like the last, I guess you could say back since our last correction, which seems so long ago, but 2011. And Nasdaq's been moving higher. Nasdaq seems to be breaking out, but little things like the S&P stalling at that channel resistance is something that I'm watching. It seems like overall market, I mean, certainly the word is up. So my expectation would be that the S&P wants to break through that channel. And if that happens, I would think that the market would be taking a significant leg higher. But for the last, I think it's been the last like 4 days, the S&P has been stalling right there at that line, just slowly inching higher, slowly inching higher. So on a small scale, that's what I'm watching. But when you pan out a little bit, you can't ignore the fact that this time of year has a positive seasonal bias. We all know how the end of the year tends to go. Nice positive tailwinds there as well. But I get a little nervous, to be honest with you. When you look at that overall forecast, you look at this run up since October, which has just been somewhat straight up in the air. But if we make it to February, this becomes, I think, the third longest bull market in history. Certainly doesn't mean you can't go higher. I think we all know that, but you start asking yourself, we're in a bull market that, the overwhelming majority of all bull markets have ended before this. So you start to get a little nervous and everything, but I don't think anybody can deny that right now the path of least resistance is up.
What about oil with the big sell-off here today? What does that mean, first of all, for the overall market? Because obviously we were talking here, it's Black Friday, the gas prices are coming down, so maybe that makes the consumer more confident. Does that continue to drive this higher, and can this diversion from oil and the S&P continue? Can we continue to rally on the S&P and fall in oil?
Well, I tell you, it's a tough question, and that's one that I think I've been asked, and I think a lot of analysts are pondering, and I think we're just in a market right now where there's certainly obviously like with the dollar rising as well, a lot of questions about the dollar, how far can that go, the correlation to oil dropping. You look at gold and what's happened there, and how long all these runs can last. But take, for example, again, like the S&P, I wouldn't have thought that we could just go straight up in the air for over a month either, and we just keep doing it. And so same thing with oil. How does the saying go? The market can stay irrational longer than you can stay solvent. So, the market can keep going and keep going and keep going. So I'm more of a fan of just kind of looking at anything, whether it be the S&P, whether it be gold, whether it be, oil, and just letting it kind of tell me rather than try to figure it out. So, for example, when we looked at gold, I think just about 2 weeks ago, we just kind of noticed that gold had a couple weekly reversals. We had broken back above a level that we had just broken under, and then I just kind of look at things like that and say, well, in the here and now, gold tells me we should be going higher from this 1180 mark. So I would do the same thing with oil. I would look for some sort of turnaround that kind of tells me, hey, oil might be at least finding some sort of a short-term bottom. The same way I would treat the markets right now. I'm certainly not getting in its way. I'm just anybody that follows me or anybody that's a part of any kind of service that I do, I said, let's just wait for these things to tell us that they're reversing rather than try to figure out and necessarily anticipate.
And so let's go to your forte, and that's the biotech stocks here. And let's just start out with the biotech index here, and that was trading at all-time high on Friday. Why don't you just talk about the IBB a little bit, and then let's go into some of the individual issues, because maybe you could still find some that maybe at some levels that may still be attractive.
Absolutely, absolutely. Definitely what I consider my bread and butter, probably because I follow it daily. But yeah, the IBB broke to a new high. First thing I would tell anyone following the IBB and following biotech in general is to check out roughly a 3-year chart of the IBB, and you'll find yourself a nice, pretty little trend line starting from way back at the end of 2012. You'll notice that that is exactly where the IBB bounced in October. So for anyone following this longer term, anyone following biotech, holding biotech positions, trading biotech, I'd be following that trend line first off. We are far, far away from it right now, but as 2015 comes, I would encourage everybody to watch that. Now, in the middle of October, we hit that trend line, bounced right off of it, and then over the last 2 or 3 weeks, we had this somewhat of a kind of bullish flag formation, kind of trending slightly lower, and then about 4 or 5 days ago, we broke through it, kind of letting me and all of my followers know, hey, biotech seems to be going higher. So we certainly started to get a little bit more aggressive on the long side. So at this point, again, it looks like biotech just wants to go up. It seems to be leading. You'll always see it in one of the top 5, top 10 industries. So as the markets go higher, especially the NASDAQ being the stronger one as of late, a lot of these biotechs in the NASDAQ, I would think up is the word, and I certainly would trade that way accordingly.
Okay, let's go to some individual issues here. I guess we just need to talk about the big guns first. BIIB Biogen here trading near the highs for the move. Actually, it's pulled back a little bit here. Bob, been trading at 300 to 310 range here.
Yeah.
What's wrong with Biogen here?
Yeah, a little disappointed in that stock because with such a great run up, and it seemed like Biogen was following that course for the last half of October, but then kind of down the stock went. Biogen has two main technical levels, I guess you would say, that I would be watching. The first is if you look across the last 6, 7 months or so, the price right around 320 is a number that seems to always be an issue for that stock, whether it be on the way up or the way down. All right, so I think that first off, we'd love to see that stock turn around and break above that 320. Obviously, 300 is always a psychological type number, so that's what Biogen has been holding for the last 2 weeks. But more importantly, that stock's in a down channel that you can kind of see just, from August. Take your August low, take your end of September peak, just draw your channel down, hit it perfectly about a week or so into November, sold off from there. Okay, bounced again in October. So we're in this channel, and the top side of that channel, that resistance is coming down right to where that same 320 is. So until we kind of get above that, I would think Biogen's trend is down.
Okay.
And again, if you look at the last couple of weeks, that is not thrilling considering you look at biotech as a whole, it's just been on fire.
Okay, let's go to some of the other big guns here. Amgen, AMGN.
Sure, sure. Again, that one, to me, that one's very clear. 160 is a problem for that stock. Okay, done very well, of course, with this little stalling pattern we've been in over the last month. We break through that. I'm sorry, I said 160. I mean 165. We break through that 165. A little bit more of the slower mover here. So I wouldn't necessarily be forecasting this huge run. But if we get through 165, you'd have to expect 170, 175 might be next on deck. So when we follow that, we're kind of watching that 165 stalling us and just looking for a break above that.
Okay, let's go to the chat here. And first thing's coming from Rob Hood. And I don't know if this is a stock that you follow. ACAD, Acadia Pharmaceuticals. Any take on this one?
Sure, absolutely. We do follow that. We actually follow a lot of the biotech names. This one is one we were kind of watching it for a while, and when from a technical standpoint, what I tend to look for was having a little bit more of a difficulty seeing what I wanted to see on this particular stock. But I would think that if it held 30, that would be a level that you would expect at least a run back up to the high of 32, and then you kind of take it from there. Okay, but this one here a little bit more, again, from what I kind of tend to like to look for, the charts that I look at, I like to have these clear breakout and identifiable entry points, and this one's been a little bit murkier for us lately.
If you look at it too, you had that period of consolidation trading the range around the $28 level, and then it
Mm-hmm.
had the blip up, and now it looks like it's kind of doing the same thing. So we'll take a look at that. Now I know this is a question that I've asked you before, but I think anybody that follows the biotech sector would like your take on it again. And it's coming from Sheldon McIntyre, Herd Capital. And he would like to know if Christian knows a website service that provides a detailed approval calendar for the biotech stocks.
Absolutely. Probably the most common or most common question I get asked. There's a site that I like to go to that has a really nice FDA calendar. It's Biopharm Catalyst. And I think we mentioned it in the last time I
Yep.
was on. That's one of the ones I like to look at. I also like to look at earnings calendars to find out when these names have earnings, because I think more often than not, the fear when I start, there are a lot of people interested in biotech, and then that fear of, the jumps or the drops that could happen. So I always say, well, one real nice free site, biopharmcatalyst.com, just go right there. The FDA calendar is right there in the front, puts it in order. For example, Insight, has a little FDA thing coming up on the 5th. It's a great little one to use. It's one of my favorites. And then again, like an earnings calendar too is something I'd probably be watching.
We're all about free here in the
Yeah,
Benzinga chat room, so we
exactly.
definitely like free. Okay, here's one that's been into the news, out of the news, in the news. TKMR.
Yeah. Um, you know, as a trader, I've traded that a few times, and I don't know that I've had the success that I would like on that stock, because it's just been here, there. I've made some pretty good trades on it, but again, there's a price that we've been watching, and that's 16. The last trade we actually made on it was back in the beginning of November when it got above 16, a real quick short jump. And then, of course, now here we are again holding 16. 16 is the price that goes back, support in August, resistance in April, resistance beginning of February. 16 seems to be a key number. But I also noticed when I look at institutional money flows, institutional money has been coming out of that stock. So that's a little bit of a concern. Then you look at how it's been kind of dead wood here over the last couple weeks, makes me wonder if the stock is preparing for a break. So if it breaks below that 16, that's the reason I nor anyone that that works with me, we haven't been going long at 16 on that. We've seen some much better looking names in that price range than what that's starting to look like.
And when you're trading the headline stocks too, you got to pay attention to the headlines. And a lot of stuff happens overnight when the markets are closed or whatnot. And I know I've heard Dennis say before, like there's just some stocks that it's just like, you just not good to trade or psychologically
Yeah.
not good to trade or whatever. So that's a great point. Boy, the chat is lighting up here. And another stock coming from Nita, CLDX.
Ah, yes, yes. I just wrote about that a few weeks ago. Yes, that was a stock that was one of the first of the biotechs that had been kind of basing along. There's been several that we've traded and been watching, especially here over the last week or two. That was one of the first ones. Had a key resistance around $18. June, July, almost hit it again at the October. So when this broke through 18, we had actually written this an article on this for Benzinga and said, hey, check this thing out. Breaking through 18 should be going higher. Now that's above 21, would expect it to hold that type of a number, the 10s, the 20s, the 50s of the world. And sure enough, that's where it's been holding. Other stocks that have made similar moves would be, something like ARIA, ARIA, just made a recent move above 650, very similar to that. So the writer there that's interested in CLDX, tell him to check out that one, just made a move similar. Another one would be Xoma, XOMA, just made a move through $5, very similar. That kind of basing along the bottom, forming a good resistance, telling us we're breaking out. Stocks like that are great. Love them.
Do you is this AR ID, is that or ARIA? That's not the one with the diet pill, is it?
I believe it might be actually.
Okay. Yeah.
And this was one I think that, if I remember correctly, I might have just written about this for Benzinga also. But what I do know is it's one we traded because we were watching the 650 mark on that stock and how it kind of been stalling there. Obviously, been holding 5 as a support for a while. So having broke through the 650, that's where we started looking at entering trades, and you kind of look at it now. But there's a lot of stocks like this in the biotech arena that are now finally, haven't been taking part in the biotech rally at all, and now they're starting to look like they're catching up a little bit or trying to get ready to start making a run.
Okay, couple more stocks before we let you go. Celgene, CELG.
Yeah, Celgene. Another one of those ones that reminds me of Amgen, reminds me of the Vertexes of the world, holding the 110. I would say anything. I would like to see this more of a pullback to 110, than catching it here. But I would think that a pullback into that general area would be a spot that I'd be interested. Obviously, this is one of the ones that's been stronger, moving very similar. If you look at a chart of the IBB, look at this, you're going to get pound for pound movement there almost. So moving very similarly. But one of the stronger names, I would just prefer it as a trade. I prefer it somewhere back closer to 110.
Okay, and we have another one, NLNK. I'm not real familiar with that one. Is that something that's on your radar?
Yes, yes. Actually, the last trade we made on this was back at 30. Okay, very similar.
Wow.
And again, this is one of those wild ones. This reminds me of INSY, one of those ones that can really move around a lot for you, but it's hard to catch it, like that little, kind of like that wild horse type thing. It's hard to get a control of it every once in a while. But we thought when this thing shot up in October with the rest of biotech, it certainly seemed like it needed a cool off. So we just kind of stayed away from it. Thought maybe the 35 area, but again, it was just a little bit too kind of wild at that time. And we decided, well, let's wait till the 30 area. That seems to be roughly kind of where the top of that base was. You look in August, kind of got to the 30 area. So then when it came down to 30, that was the best trade looking to me. I would think next up, if this thing can hold above 40, we should be taking another leg higher. A lot of moving up above that 40 in October, but we can never hold it. So I would think if we would hold that 40, that would be a great sign for a higher move on that stock.
And before we let you go, Gilead Sciences, GILD.
Yes, the big guy. Everybody always wants to talk about Gilead. This is one that I like the reversal that the stock made back on Tuesday. Okay, I like that kind of, for those of you into the candles of the world, something similar to like a hammer after a nasty little sell-off. Wasn't a fan of the trend line break that Gilead had made and the break below the 110, but it looks like at least in the short term, this reversed on Tuesday. I like this. You can see over the last 2 or 3 weeks, that stock just kept holding 100, holding 100, holding 100. You see that nice little reversal type of day on Tuesday. Here we are holding 100 again. I would think a trade from 100 to 105 should be in the cards for that stock. A break
Okay.
below 100, a solid close, I would say we're at least falling back down to 90.
Yeah, you gotta get out of the way. Christian Tharp, market find maven and author of the 5-Star Stock Watch, joining us on Benzinga's pre-market prep. Thanks a lot, Christian. Great. We rifled those stocks off to you. You nailed them all. Thanks for coming on. We hope to speak to you again soon.
Absolutely. Love being here and look forward to being on again. Everybody have a great Thanksgiving weekend.
Okay, thank you.